Every time someone opens a bank account online or signs a contract remotely, they rely on invisible rules of trust. eIDAS is the EU's way of standardizing those rules, so digital identities and signatures are recognized across countries, providers, and systems. In this course, we'll move through 3 stages. First, we'll ground ourselves in core digital identity concepts and trust. Next, we'll connect those ideas to the eIDAS regulatory framework. Finally, we'll translate that understanding into a concrete, end-to-end banking architecture. You can think of eIDAS as the EU's digital trust playbook. To start, it's a regulation, not a guideline, so member states must apply it consistently. That's powerful for architects. The legal ground rules are stable and shared. It also sets a common framework for identification and signatures, so terms like high assurance or qualified signature mean the same thing everywhere. Together, this enables secure, predictable, cross-border transactions, such as a bank onboarding a customer from any EU country. To design an eIDAS solution, it helps to know why governments and banks care so much about it. At the top level, eIDAS supports a genuine digital single market, where a customer in one country can smoothly use services in another. It also underpins economic trust, so transactions can be relied on without face-to-face checks. For banks, there's a strong drive towards paperless efficiency and, crucially, legal certainty when dealing across borders. At its core, eIDAS is about trust, not about designing whole systems for you. It sets common rules so that electronic IDs, trust services, and national eID schemes are mutually recognized across borders. However, it doesn't replace other regulations. Data protection still follows GDPR, and anti-money laundering checks follow sector-specific AML and KYC rules. It also doesn't dictate your technical user interfaces. You remain free to design UX and implementation details as long as you respect these trust rules. In practice, eIDAS acts like a trust gateway between countries. It lets a person use their national eID to access services in another state, without creating a new identity each time. For businesses, it means a signature created in one country is legally valid across the EU, so a bank can onboard customers from abroad with confidence. And for public administrations, it provides shared rules to trust each other's identity assurances and certificates. Electronic identification, or eID, is simply how a person is represented in digital form, so systems can reliably know who they're dealing with. Under eIDAS, each EU country can notify its national eID scheme, so others must recognize it for cross-border services. The core idea is reliability, strong, predictable identification for important online transactions. Levels of assurance are a way to match how sure we are about someone's identity to how risky the action is. Low level uses light checks, suitable for low-risk interactions. Substantial involves stronger identity proofing, appropriate for things like standard bank onboarding. High is reserved for the most sensitive operations, including qualified electronic signatures, where regulators expect rigorous, well-documented proof of who the user really is. Now let's see how those levels apply in a typical banking journey. As the customer moves from browsing to logging in, the risk is still relatively low, so basic authentication can be acceptable. Once they start onboarding, risk jumps. You're creating a real banking relationship, so you need substantial or even high assurance with rigorous identity proofing. At the contract signature, the risk is highest. Here, strong multi-factor authentication tied to a qualified signature is essential to meet both security and eIDAS requirements. eIDAS defines 3 tiers of electronic signatures with rising assurance. Simple electronic signatures cover anything from a typed name to an I agree click. They're easy to use, but weak in proving who signed and what exactly was signed. Advanced electronic signatures are bound to one person under their sole control and reveal any document changes. Qualified electronic signatures are advanced signatures plus a qualified device and certificate, giving the strongest legal effect comparable to handwritten signatures. Under eIDAS, qualified really means something special. A qualified electronic signature isn't just strong security, it is legally treated like a handwritten signature everywhere in the EU. That means a contract signed remotely with a QES must be accepted just as if it were signed in ink, in person, in any member state. Trust services are the hidden legal and technical backbone of our whole solution. Their role is to guarantee 3 things: integrity. What was sent is exactly what was received, not modified on the way. Authenticity. You can reliably link data or a signature to a specific person or organization. And non-repudiation. Later, that person cannot plausibly deny having done it. Everything in eIDAS onboarding and qualified signing ultimately exists to reliably deliver those three outcomes. Within eIDAS, there are many trust service providers, but only a subset are qualified trust service providers. Think of TSPs as vendors that meet baseline security and process requirements to issue certificates, timestamps, or signatures. QTSPs go further. They're audited, formally approved by a national authority, and listed as trusted at EU level. For our banking use case, integrating with a QTSP is what gives signatures the strongest court-ready legal effect. eIDAS doesn't work on blind trust. It works on supervised trust. National supervisors regularly audit trust service providers. When a provider meets the qualified requirements, it's added to the official EU trusted list. Your bank systems then rely on that list, not on individual contracts or assumptions. As an architect, your job is to wire in automatic checks against the list, so every certificate and signature is validated against up-to-date, regulated information. Let's lock in the big picture. eIDAS gives you the legal framework. Assurance levels tell you how much trust you can place in an identity or signature. And QTSPs bring certified infrastructure. Your next step is to turn those ideas into concrete components in your architecture diagrams.